You buy a life insurance policy through your LLC or S corporation or even a C corporation, but you have to hold it in the entity to be able to get the write-off. Let me ask this because I read this book called Killing Sacred Cows, but he was talking about in the book that if you're uninsurable, that what you would do at that point is, if you have a kid or something, get a whole life insurance policy, uh, make the payments, maybe front loaded, because I think the Rockefellers do something like this. Uh, they get the policy on a younger child.
Right.
They front load it, however high the policy is going to be. Uh, but let's say you're making the premiums, right? And let's say on your child, let's say it's 10 years and there's, I don't know. I mean, I'm not good at the math on the life insurance stuff, but let's say it's $50,000,
Hmm.
and you want to start a business or buy a truck, like you're able to do that kind of thing. That's correct, right? Like you can do
Dude,
something like that.
that's super smart, and you're not even in insurance yet, man. That's awesome. I actually
I
help.
study a lot, man.
That's awesome, dude. I actually helped a client with something pretty similar, but it was for his wife, because he couldn't qualify. But yeah, I mean,
Wife, cousin, something
so
like that.
yeah, so you can take out. So like, let's say for example, in that scenario, the wife had to sign off on it, right, because the policy was going to be on her. But
Right.
um, yeah, I mean, you can take that, and he's the owner of the policy. So any cash value or anything that's accumulated, the owner would be able to withdraw, move however they want to. And actually, a lot of families utilize that for kids, younger kids or grandkids for college too, right?
Yeah.
So they pay a certain amount. By the time they're 18, they're gonna have, depending on how much they put in, but let's say, 30, 40, $50,000 in there that they can utilize for college or utilize however they want to. And I think that that's something super, super important, that a lot of people aren't aware of, but
Yeah.
you could definitely do that you mentioned, man.
And guys, you can do this and still within the tax strategy with the LLC. A lot of people don't know about that kind of that you can actually do it on another person, away from you. You want to talk about infinite banking, man? But I don't know how much more time you got, but we're at 49 minutes, so let's kind of
Let's just
we'll
keep
get
going.
off at an hour.
Yeah.
But go ahead and talk about infinite banking because I know you really wanted to touch on that.
Yeah, man. So so with the infinite banking, it's pretty much a whole life policy, but it's an index universal life, right? So
Index
what we would do
universal.
with this type of strategy is we would do the minimum required life insurance benefit, and we would do the max accumulation benefit, right? So all that would mean, for you, is essentially, instead of having like a $250,000 death benefit, your death benefit might be 100K, right?
Okay.
But what's going to happen is, instead of, let's say you put $100 a month, right? So if $100 a month was going to cover $250,000 of life insurance, instead of that $100 going towards 250 and only a small portion going towards cash accumulation, only we're gonna do it at $100,000 death benefit with the minimum death benefit. So that $100, less is going towards the death benefit and more is going towards a cash value growth,
Right.
where it can compound interest. And with that, pretty much, instead of, like, let's say for example, if you put your money in the bank, it's great. At least you're not going to lose it. But the thing with that is, with inflation and everything that's going on, you're not really gaining any percent on it. So if you got 10, 15, 20 grand in the bank, you're getting a 0.0001% return, which is probably going to give you $1 a year, right?
Yeah.
So,
Yeah.
and I'm not telling you to go put 20 grand in a life insurance policy, but you can do it on a month to month basis, right?
Yeah.
So
Premium
if you were
style.
to, yeah, I mean, if you could put $100, into a life insurance policy over a year, you're gonna have the same amount of cash value that you would have had in your bank. And then in a few years, maybe year two, now you're going to start getting a few more interest because now you have more money in there, and now you're just going to keep growing. So whenever you need to withdraw any funds as well, you can withdraw any funds, and utilize them however you want.
You just gave me a very interesting concept just now. Um, now I want to see your opinion about this. I'm sorry, I don't mean to interrupt you like
No, man, you're good. That's what we're here
that.
to talk, man.
If I get the life insurance policy, say in an LLC, right? But let's go with the, I don't know if you heard this terminology before, an overfunded life insurance policy, whole life insurance policy. You ever heard
Yep.
that before?
Yeah, that's what I'm talking about.
Okay, right. Okay, right.
Yeah.
Okay, so we're on the same page.
Yeah.
But you're using that as for the deduction on taxes to offset your taxes every year. Let's say you set it to your premium equals. I mean, I don't know how the premiums necessarily
Right,
work
right.
yet, but let's say
Uh-huh.
the premiums add up to $4,000 to $5,000 a year. That's a deduction for the business. It's overfunding this life insurance policy that you can borrow out against later for future business endeavors. If you caught what I just said there,
Right. Yep. Yep.
that could really be implemented, couldn't it? In
Yeah, you could.
this. Oh
Yeah.
wow.